Hello and welcome to what I consider to be one of the most important shows that we've been doing for several years now and will continue to do so in the future. I must admit, and don't tell Ruchir this, Ruchir, how many years has it been?
It's been nearly a decade since we've done this show, but obviously we have been doing television for a lot longer.
Right. I must admit, and I was saying I don't want Ruchir to hear this, that I learn more from this regular interaction with Ruchir Sharma than from almost any other program that I've done. I must update you very quickly. Ruchir has now set up his own organization. It's called Breakout Capital, which is already doing brilliantly and has only recently started. So just watch this space. Don't blush now, Ruchir. I can see. I must point out, like I do every year, all the research and analysis for this program is done by Ruchir and his fantastic team. And as you know, it really is amazing research. Once again, we shall look at 10 major forecasts for this year, 2023. But let's first spend a few minutes understanding what actually happened last year and Ruchir, your earlier forecasts for 2022. Shall we go through that, the 10 forecasts that you did last year?
Yes, that's usually the routine.
Okay. So let's look at the first forecast that Ruchir made in 2022 last year. Here it is. He said there'll be a decline in the birth rate and that will accelerate. In actual fact, they didn't accelerate. Birth rates stabilized a bit. There was a decline, but they stabilized. The rate of decline in the world flattened a bit, and India is also flattening a bit. Why that change, do you think?
No, I think that what happened was that during the pandemic, we got a major drop-off in the birth rates of many people. But last year, in 2022, there was a bit of a catch-up in terms of that the birth rates have been declining. As you can see from the graph, the birth rates around the world have been declining dramatically, really for the last few decades.
Yes.
And that pace has been accelerating in the last few years and did so even more during the pandemic. But in 2022, we saw a bit of a bounce back where the birth rates increased in some of the countries, possibly as a catch-up to what happened in 2020 and 2021. Right. But the long-term trend, I think, still remains intact, which is that the world is seeing a decline in the birth rates, and so therefore the population increases around the world have also been slowing down very sharply.
And you pointed that related to a smaller workforce, and that could affect growth rates of the economy.
Yes, and that's an effect that we are seeing, around the world, the growth rates, the potential growth rate of the global economy due to declining birth rates and deteriorating demographics is falling everywhere. So the global economy, which used to grow at, let's say, 3.5%, 4%, now is lucky to grow at 2.5% to 3%, largely because of the demographic changes.
I mean, that's an amazing finding, and I don't think anybody else has really related the two until you told them about it. Then they just copied you. Let's look at the second forecast that Ruchir made last year. He said that China's economic power was peaking. In actual fact, yes, China's economic power has peaked. If you look at the growth rate, look at it compared to the rest of the world. It was 10.3 compared to the rest of the world's 3.8 back in 2000s. About what? 7% above global, then it was about 4% above global, and now China and the rest of the world growth rates are about the same. So that rapid development compared to the rest of the world has seemed to have gone recently.
Yeah, so that's my point, that we are at that moment now where China, the best economic growth rates are well behind it. It is a middle income country. It's facing all sorts of challenges. We spoke about demographics at the outset of the show.
Yes.
Very few developing countries have a demographic profile as bad as what China has because of its one-child policy having such a lagged impact now. Its debt levels are very high. The property sector is really saddled with too much debt. And so therefore my forecast is also that in the coming decade, China's growth rate is likely to be closer to 2.5% on average.
That's a huge change.
Right, and we already saw that in 2022, which is that China's growth rates fell a lot. Some of it, I think, was suppressed because of its zero COVID policy, which has
Right,
been a
of
failure,
course.
and now it's reversing course rather dramatically on that. So China's growth rate may bounce back a bit in 2023, but the long-term forecast based on demographics and debt and productivity is that China's economic growth rate is unlikely to be any faster than that of the global economy. So China's share in the global economy may have also peaked. And that is a huge development because no country gained as much share in the global economy as China did in the last 4 decades. It was a dramatic rise.
Dramatic. I mean, as you showed, growing at 10% on average for a few decades is just phenomenal. And that's gone. I'm a bit surprised that it hasn't gone up, base effect, because after the pandemic, you'd think the next year there's a low base, so the growth rate will be higher. But even that hasn't happened.
Well, that may happen in 2023.
Just with the low base effect.
Yeah, because they were the last people to exit the zero COVID strategy. Right. So that suppressed growth rate. So it may happen in 2023, but we're more interested in what the long-term trend growth rate in China is. And I think it's 2.5% a year, which means that it's unlikely to grow faster than the global economy for the foreseeable future.
From 10% to 2.5%, that is just a phenomenal change. Let's move on to the next forecast that Ruchir made last year. He said that the global debt trap will deepen. In actual fact, yes, mostly it did. But India was stable. The debt servicing cost as a share of income, if you look at the world, is rising. Debt servicing rising. India, not rising, in fact, falling a little bit, if not stable. That's a big difference between India and the rest of the world.
Yeah, this is mainly for the private sector. So I think that in India's case, the private sector has deleveraged. They have reduce the debt burden, and so therefore they're in a better shape just now. But around the world, particularly in developed countries, in places like the US, they have taken on so much debt on the private sector side in terms of the firms that as interest rates have gone up, the cost of servicing the debt has been going up a lot. So therefore, the forecast last year that the debt trap deepens, and it seems to have played out that way.
Yes, and that is a worry actually, because the implications for the future. Moving on to the next forecast that Ruchir made last year, this was that inflation will rise but may not hit double digits. That's quite a bold forecast. And actually, yes, it only increased to 8.8. It didn't hit double digits. Of course, it did rise as Ruchir had forecast, and it's kind of back to the levels of the 80s, but didn't hit double digits. Not terrible, but still worrying.
Yeah,
8.8 is high.
Yeah, because I think a lot of people at the beginning of 2022, when we did this show, were looking for inflation to rise. Some were looking for it to rise explosively. Others thought it would be transitory. I think we got something in the middle that, yes, inflation did rise, but now it seems to have peaked, which is that across the world, the inflation rates look to have peaked. But as we'll discuss in the show subsequently, that it's likely to remain much higher than where it was in, let's say, the 1990s or the 2000s. So higher and stickier inflation, but not the 1970s show where inflation was in double digits for a long period of time.
Yes, that is a significant difference. The next forecast that Ruchir made last year was about greenflation. That's about commodities and the commodity prices going up. He had forecast that global commodity prices in 2022 remain relatively high. In fact, commodity prices did remain high. In fact, they went up 15%. That is relatively high compared to other prices. Why is that still happening?
Yeah, that's a pretty significant outperformance, because remember that most assets like stocks and bonds around the world have fallen significantly in 2022. The reason that commodity prices have been more resilient has been because of oil, energy, partly driven by what happened in Ukraine, but I think it's much deeper than that, which is that because of concerns about the green environment, you've had a lot of supply cuts, that not much new capacity is coming for commodities, because people are very concerned about the impact it has on the environment, and lots of regulations and political pressure is there dissuading people from
So in a way, there's a positive aspect to that. People are being more careful about how they mine, how they
but the negative effect is the fact that you're getting higher commodity prices. So, there's how do you get from point A to B remains a challenge. We all want a greener environment. We all want, but the problem is to build a greener environment, it takes time, A, and two, that it also requires some of the commodities to build the new green infrastructure, whether it's copper, aluminium, some of these so-called dirty metals, you need them to build the new green infrastructure.
To improve the environment. Yeah. So it's a tough one ahead.
It's a tough one, but supply has been constrained and demand has been weak, but because supply has been so constrained this time that even in a global slowdown, commodity prices have been relatively resilient, led by the energy complex.
Right. Moving on to the next forecast that Ruchir made last year, and that was that productivity paradox persists. Low productivity. There will be low productivity. Yes, in fact, in actual practice, productivity remained low despite the tech boom. A lot of people said technology is going to change the world and productivity is going to go shooting up. But we just see from his graph, that in 2021 there was a kind of post-pandemic flare-up because of in productivity, partly because of the tech boom. But then it's gone back again. There is low productivity now. So the tech boom, Ruchir, has not improved productivity. It's a shocker.
Yeah, there are many reasons for this. Some of the reasons that I've written about is that it could be that you have so many zombie companies out there, so many inefficient companies being artificially propped or were artificially propped by very low interest rates, too much stimulus. So that's been eating away at the creative destruction fabric of economies. So the explosion in zombie companies, too much government intervention has been keeping many inefficient companies alive. That could be one reason for this. The other reason some people say is that the kind of technology we are seeing, whether it's gaming or other things, are more distracting than enhancing as far as productivity is concerned. So I think there are some, this is a very deep research topic, which is that why in the midst of this tech boom do productivity numbers continue to look so poor? I think a good reason for that could be the fact that you have too many inefficient zombie companies which are kept alive. One statistic, like in a place like the US, the number of inefficient zombie companies that are not able to even service their debt without borrowing more and more, that number has shot up from nearly 2% in the 1980s to nearly 20% now.
So 10 times, zombie companies have gone up 10 times.
Yeah, that's right. In terms of, and that could be chipping away at the creative destruction fabric of any capitalist economy.
I know none of our viewers would like to hear this, but has this low productivity got anything to do with working from home? I mean, the pandemic is sort of temporarily over, but people still want to work from home.
It depends who you ask, and that's what our next shows.
Depends on, what you actually believe.
Yeah.
The next forecast, he said, did working from home help or hurt productivity? Employees or staff say they are productive at home. Let me stay at home. I'm as productive. 87% say they are productive at home. But their bosses say, sorry, I don't believe you. Only 12% of bosses believe that employees are productive at home. So what's the truth?
Exactly. So as I said, it depends who you ask. But it clearly is not showing up in the productivity numbers. So maybe the bosses are a bit more correct. We don't know, or it's a complicated model. But I find this fascinating about this dichotomy in terms of what the employees believe and what the bosses believe.
But I think your productivity won't go down because you've always worked from home, right? You don't
I wish that were the case.
Let's move on to the next one. Amazing. Bosses versus the belief of bosses. They live in another world, these bosses. Okay, let's have a look at what Ruchir forecast in 2022, that there'll be increasing data localization. And that actually what happened is data localization in 2022 did intensify. Look at Russia. It's kind of weaponizing data localization. Maybe you could run us through. China is racing to block global descent. US senators want to stop TikTok. India already did. And this is a bit shocking from your data. India is 5th worst in the world in terms of data restrictions. We just come after China, Saudi, Russia and Indonesia, and then India in terms of data localization.
Yeah, this is an index which is maintained by the OECD, which looks at in terms of what has been the digital services enabled businesses, what sort of barriers and data restrictions they face. So that's what the OECD ranking is. So it is what it is.
Yes,
I think there are about 80 countries in that ranking, about 45 emerging markets in that ranking. So that's where India's ranking is as per that. I'm hoping that improves if you have a new, I'm told there's a new draft privacy bill which may help
Yes, yes.
like improve that. But as of now, that's the case. And around the world, we've seen that there's been much more of an effort to keep data within countries and not allow for it to really go beyond borders. And that's something which is...
Why is everybody so worried about TikTok? I mean, the US wanting to ban TikTok.
Well, I think it's pretty obvious. It's a Chinese...
So Chinese and it's so popular.
Like, so popular, and I think that they have a very sophisticated algorithm, AI systems, which I think a lot of people feel sort of breaches
kind of
the line.
snoop into people's
Yes.
private lives, etc.
Yeah.
Right. Next one, this was amazing. Bubblets deflate. That means there are a lot of small little parts of the economy that are doing very well, and you said they're going to deflate. They were doing brilliantly, and now look what actually happened. They did fall further. They did deflate. Bitcoins, of course, we all know, gets the most publicity, down 64%. Tech companies with no earnings, some of them are zombies, down 53%. SPACs down 41%. Green energy down 25%. Huge change that. Those are big figures.
Yeah, in 2021, I had identified a few bubblets, which
Yes.
are really about good ideas gone too far in a way, which
Right.
is that these were good ideas but got too much speculative interest in them, and so I identified them as bubblets. And I'd said that typically if you look at the path, bubblets tend to fall by 70% once they peak. And I think that we have roughly seen that play out.
Yes, look at that. I mean, it really is.
Yeah, this is just for the year. From the
Yeah.
peak, they're down even more because some of them started declining in 2021.
Of course,
so this is
yes.
for the last year's data
Yes,
of
yes.
2022.
This is averaging 50. It would be at least 70%.
Yeah,
as you had
mostly
forecast.
these bubblets have deflated by 70%. So that's sort of played out, yeah.
From the peak.
From the
Yeah,
peak,
wow.
yes.
And the next, let's have a look at forecast that Ruchir made in 2022. He said small investor mania for the stock market will cool down. In fact, in practice, in 2022, what happened was lower investment by small retail investors happened in India. Look at India's retail flow. That means retail investors, how much did they invest in shares? Dramatic decline in this 1 year. It is quite a serious, from 1,500 to 500 is like a huge fall.
Yeah,
Why is retail investors losing interest?
It's partly because we saw such a massive inflow in 2021 that it's
Yeah.
cooling off that.
Cooling off,
Yeah,
yeah.
and the other thing, of course, is because interest rates are going up in India. So now all of a
Right.
sudden people think that by putting money in the bank accounts or in
Bonds,
fixed deposits,
yeah.
you'll be able to earn some return.
Right.
So therefore, the very negative interest rates you had in India have changed now. And so therefore, like some of this retail mania is cooled. And again, it's happened around the world that in the US, for example, we've seen a massive cooling off of retail mania. In fact, there we've seen big outflows with
Wow.
people pulling money out of stocks and bonds, because there in the US, obviously, the market's down a lot more than in India. So the market's cooled off a bit around the world, including in India, although India's done much better
Much
than the
better,
US.
yes.
But in general, the retail mania around the world has cooled.
So is there something that the big investors know, the retail investors, because big investors are still investing, right, in the
Yes.
market, but the retail, so is there asymmetric information here? As usual, poor small investors don't know something which the big guys know.
Well, I'm not sure, but I think that generally they got too caught up in the post-pandemic boom, like in the
Yeah.
euphoria. And I think that that's sort of cooling off now.
Right. One more forecast. Let's have a look at Ruchir's forecast for 2022, that the physical world is still more important than the virtual world, than metaverse. In fact, what happened in 2022, the physical world investment was actually, as he said, much higher than the new virtual economy. Look at the last 10 years before last year. The investment in new economy was up 5% and in the old economy down 7%. That's a 12% difference. Advantage 12% for the new economy. In 2022, the new economy grew by 5.7% and the old economy 9.7%, from -7 to 9.7. That's a 16% swing. How did you figure this one out?
Well, the world had underinvested a lot in the traditional physical economy, whether it's, you spoke about commodities and the underinvestment, due to the green politics, and then even in machinery, equipment, industrial, they're underinvested because everybody was so focused on investing just in tech. So as the tech bubble has burst, I think that people have once again gone back to focus on the old economy and how we need much more of that basic infrastructure to still function. Right. And those shortages came through, and that's the reason why inflation flared up as well, because of the underinvestment in the physical economy.
Well, that was the last of the 10 forecasts that Ruchir made in 2022. And I hate to say this to your face, Ruchir, and don't blush. You got 90% right. And even the one that you got wrong out of 10, that was pretty close to getting it right as well. It was just a downward trend, but it's still flattening. So I'd give you 97%.
Right. Well, the past is no prologue, so now we are going to see what happens
Now
this
comes
year.
the real thing. We move on to what's going to happen in 2023. What's going to happen in this year ahead, and what are Ruchir's forecasts for that? And remember, 97% right in 2022 last year, and now 100% right. Okay, the first thing, Ruchir, that you're forecasting is there's going to be a long grind. By long grind, you mean there's going to be no bust and no boom. It's not going to be a dramatic recession. You're saying there's shorter recessions now because of easy money, higher government spending and low interest rates. And if you look at the shorter recessions according to Ruchir, in pre-World War II, the percentage of time that there were recessions was 44%, nearly half the time the economy was in a recession. Then from World War II till 1979, almost 20%, 18% of the time was in recession. That's high. Now, because of this easy money era, it's down to half that and 1/4 what it was. This is a huge change.
Yeah, I think that this has a lot to do with the role of government stimulus, government intervention, that in the pre-war era, there was very little of government intervention in economies such as the United States or the developed economies of that era.
Right.
And it's really since then that you've seen much more government intervention, and especially in the last 3-4 decades, as inflation was declining, every time there was the slightest trouble, because inflation was low and falling, the governments and central banks were able to come out there and put out a lot of stimulus. And that was particularly true in the pandemic, that we saw stimulus like never before during the pandemic.
It's amazing data, 44 to 10%. So you're saying John Maynard Keynes was right?
Well, in terms of, I'm not sure right or wrong, but he clearly had the maximum influence on policymakers and generally on economists.
And as you were saying, your data shows that in this long grind ahead, government stimulus or rescues increase sharply, leading to shorter and fewer recessions. Look at your data on stimulus as a percentage of GDP. It used to be 1% in 1990.
Right.
And now it's 46% this time. Amazing change.
Yeah, but the only downside of this is the point that we made earlier, that because of so much stimulus, so much intervention, are we keeping too many inefficient companies alive? Are we not allowing the natural process to play itself out? Where a lot of zombie companies and other dead wood gets cleaned from the system. So that's the downside. But the long grind that I'm forecasting now refers to something a bit different, which is that we've been in this era now, as I said, that as you had declining inflation and you kept getting lower and lower interest rates, and the governments were able to stimulate and also cut short recessions. The problem now is that inflation, I think, is likely to remain stickier. Inflation has peaked and is coming off in many parts of the world. But the 2% inflation that we had for much of the developed world is likely to be more like 4%. Why? Because the demographics have shifted. The people's attitude towards work has shifted. So even now, if you look at it, the global economy has been slowing down, and yet unemployment rates around the world are close to record lows. So it's very hard to get people to come back into the labor force. A lot of people are still living off a lot of the stimulus that was put during the pandemic. In fact, some research shows that nearly half of that excess savings that people built up because of the massive stimulus following the pandemic is still sitting in people's banks accounts. So, you know, like the whole idea being that provides a cushion. The problem is this, that delays the inevitable, which is that you have so much monetary tightening, and yet the global economy has been relatively resilient so far. But the problem is that once those savings run out, and then the recovery time starts, the recovery may also be soft.
Much longer.
And the shape may look like a long smile
instead
rather
of a
than
kind of a V.
Exactly.
The old recessions used to be a sharp down and a quick sharp up. Now you're saying it's going to be a long grind, a kind of a, not a V anymore.
Yeah, and that's because inflation is likely to be stickier, and because of stickier inflation,
Right.
The capacity of governments and central banks to stimulate will be much more limited. So therefore I feel that we are in this period of the long grind.
Finally, I just wanted to look at your data on this long grind and what are the implications for India, and they're quite important, very, very serious actually, because as the world slows, so will India slow down. Because historically India's growth rate, according to all Ruchir and his team's data, India has been only slightly above the world in terms of growth rate. So if the world slows down, India's growth rate is unlikely to be above 5%. Now historically, India's growth rate has been above the rest. Look at the world on average has been 3.4% growth rate, India has been 6.1. So India has been 2.7% above the world. And compared to emerging markets, India has been 1.6% higher than the growth rate. Now, explain what happens. If there's this long grind, what are we looking at?
No, the point I'm trying to make here is that we underestimate systematically, and this is a debate I've had with so many people in India, we underestimate the global linkages. India's growth rate is very tied to what happens to the rest of the world, at least at the margin. There's a 70% correlation between India's growth rate and the rest of the world's growth rate. And the point is that it is very difficult for the Indian economy, and at least historically so, to grow that much faster than the global economy. It's quite significant that we have grown nearly 3 points faster than the global economy, but it's impossible to sustain a growth rate much above that is what we have seen. Even during the boom years of the 2000s, compared to the developed markets and even other emerging markets, India's growth rate was capped beyond a point. So I think that if the global economy slows down in 2023 as we forecast to about 2% or so, then India's growth rate is likely to be closer to 5% based on this historical fact pattern.
That it really gets capped. I mean, even 3% higher than the rest of the world is pretty high.
Yes.
But if the rest of the world is slowing, it really slows down India.
Yes, and the problem here is that we make our forecast quite insulated from that. We keep talking about 6%, 7%, 8%. Those growth rates were possible in the 2000s, but at a time when the global economy is going to be growing at 2%, then for us to grow much above 5% is going to be nearly impossible until something very dramatic, China-like happens out here.
That's really fascinating, and one has to take this into account in all policy decisions. That is 5% now, and how do we tackle that in the economy?
Right.
Now, the dollar has been rising compared to all other currencies, but you're saying you're seeing the peak of the dollar. If we look at Ruchir's data, this is what it looks like. Every time the dollar rises, it's followed by a downturn. Look at those three, and you're now hitting 11 years, which is much longer than peaks that dollar has taken to reach. 11 years is taken, so you're saying we're going to have a downturn now of the dollar, which means rupee will strengthen in comparison, or all other currencies.
Yeah, I think that, in terms of the rupee has weakened significantly against the dollar over the last 75 years, as we last spoke about.
Yes.
But the rupee's depreciation against the dollar has been particularly sharp over the last couple of years.
Yes.
And I think that that's likely to slow down because the dollar in general is looking very expensive against major currencies around the world. Now, this is a very important graph in some way, that the dollar is the world's reserve currency. But it doesn't always rise. The dollar spends time going down, it spends time going up, it fluctuates against the major currencies.
It's a fascinating graphic, actually. Yes.
Yeah, and I think that the dollar has spent a long time going up over the last decade, but typically after it rises so much and it feels so expensive, the dollar spends the next few years declining. So I anticipate that the dollar's has peaked against most major currencies such as the euro, such as the yen, and that in the next few years it's likely to decline against those currencies. Also because the US now is running very large deficits, it owes a lot of debt to the rest of the world, and also what happened, I think last year in 2022 was very significant, that the US used the dollar as a weapon to impose sanctions against Russia. But what that's done is that many countries around the world, including India, are looking at ways on how do they reduce their reliance on the dollar, how do they trade with other currencies and other countries in their own currency rather than trade so much against with the dollar as the invoice currency. So these are changes, structural and cyclical changes.
Very crucial for policymakers here that, okay, you're saying there's a long-term decline of the rupee against the dollar, but it was very sharp decline in the last 2 years. So while it might continue to be a decline, it won't be as sharp as the last 2 years.
Yes, okay. I think that's the significant finding, and it's backed by the fact that it feels very expensive. So as this graphic shows.
Amazing actually that you've looked at that because of this expensive dollar, the US cities have become the most expensive cities in the world. And the rising dollar, you're saying, is the major cause. In fact, in the world's 10 most expensive cities, New York, where do you live? New York City is the world's most expensive along with Singapore. Then there's Tel Aviv, Hong Kong, and then Los Angeles, that's dollars. Zurich, Geneva, traditionally expensive. San Francisco, again the dollar, and then Paris and Copenhagen and Sydney. So the dollars made cities in America expensive. How do you manage?
Yeah, so I've been in New York for 20 years. It's never felt that expensive, and it's backed by this data. And in fact, I can't think in my memory when New York was the most expensive city in the world, and that's what's happened out here. So that tells you further that the dollar has become very overvalued, very expensive, and is likely headed for some sort of a correction.
Right. This is almost like the burger. When burgers get too expensive,
yeah, the burger index, or even the hotel price rates.
Right. This cities is more interesting because that's what people experience.
Yes, that's right.
So nobody should go to New York right now, right? That's what you're saying deep down. Okay, and in this peak dollar forecast, Indian cities are becoming the cheapest in the world. 3 out of the top 10 cheapest cities or bottom 10 cheapest cities are in India. The world's least expensive cities, and those are Bangalore, Chennai, Ahmedabad. And then you can see all the rest on that list, and these are world rank 161 down to 172 cities. So everybody should come to India.
This is a survey done by the Economist Intelligence Unit. They do this, I think, on an annual basis, and it's telling sign. These are many indications of where the dollar is. It's a telling sign that some of the most expensive cities in the world are in America. Some of the cheapest cities in the world are in developing economies, which they always are. But the fact that India has 3 out of those 10 spots is interesting.
Amazing, actually. Now, the next forecast you say that when America goes down, which it will, the rest of the world will rise. And the data from that is actually also fascinating. This America down, the rest of the world rises. First of all, America down and the rest of the world up because US stock market values are disproportionately high. I never realized that. It's got 4% of the population and is punching well above its weight. It's got 4% of the population and 60% of the market cap. That is just out of whack. And 25% of GDP, and still, that's the economy, and still 60% of the stock market capitalization.
Yeah, America's always had the most dominant, best performing stock market in the world over a very long term, right? If you look at the last 100 years or so, America has been top of the charts. It really has a true capitalist system that way. But what's happened in the last decade is extraordinary, which is that the American stock market has done so well, has outperformed all of the global stock markets by such a massive amount that we have the situation today where even though America is only 25% of the global economy, and that share has remained stable for a while now, America's share of global stock market values is 60%, and that's never happened before. That number has been
happened before.
Yeah, that number has been closer to 40-45% because America has had the most dominant stock market in the world always. But at 60%, that number is way out of whack, and I think that number is also bound to correct in the next few years.
So Richard, the other point that you make, which is fascinating, is that America, it's like a seesaw. When America is down, the rest of the world is up, and vice versa. America goes up and down. After each big decade, America has a downward decade. If it goes upward one decade, it goes downward the next compared to the rest of the world. For example, look at this graphic. America versus the rest of the world. it was going 10.1% higher than the rest of the world, and then next decade minus 3.3, so it's lower than the rest of the world. Then up 7.6. So what do you make from that now? You're saying it's going to go down?
Yeah. As I said, that if you look at the 100-year history, the American stock market has been the best performing large market in the world by a long shot. But it follows this pattern that after it does very well for one decade, especially in the recent 4-5 decades we have seen,
right,
in the subsequent decade, the American stock market tends to underperform
yeah,
the rest of the world because it becomes too expensive,
right,
expectations become too high.
Right.
So after this very extraordinary decade that America has had of great performance, I think that it is set now for underperforming in the coming decade,
the rest of the world.
Also because its size has become disproportionate. So that will allow other countries, including emerging markets such as India, to do much better than America in the coming decade. That's my forecast, and I think
right,
in 2023 we're likely to see shades of that play itself out.
And already funds are moving out of America because they think it's reaching a peak compared to the rest of the world, and other stock markets may improve.
Just about. In the last few weeks and months, we're seeing some signs of that. But this is a very long-term process. It takes a while because most people are still anchored to the past. They still look at past returns and feel, oh, why should I go anywhere else when America's done so well?
Right.
But the point here is that these follow these decadal rhythms, and that we are likely to shift in 2023 onwards towards the rest of the world doing much better than America.
Very interesting. And the other point you make in your next forecast is that tech stocks are going to shrink. And if you look at that, that's what's happened after decades in which big tech firms dominate, they shrink in the next decade. That's historically, these are top 10 firms by market capitalization. If you're in the top 10 in one decade, there's a high probability you will not be in the top 10 in the next decade. Just 10 years and it can transform everything.
Yeah, so I think that this is very telling, that this is by market value, the top 10 firms in the world at the beginning of every decade. And as you can see, that 8 or 9 of them change.
Amazing.
And when we had the last tech boom, which ended in 2000, the top tech firms in the world then were very different from what you have today. Those days you had Cisco, Intel, IBM.
Right.
The only survivor in a way has been Microsoft.
Microsoft, amazing record actually,
yeah,
yes.
Exactly. But the top tech firms in the world today are very different than what they were back then. And as you can see that in the last 2 or 3 years, there's already a lot of churn which is taking place. The Chinese tech firms have fallen off. Right. They're no longer in the top 10. Even in America, a firm like Meta, which is Facebook's parent, that used to be in the top 10, now it's not even in the top 25. So this churn has begun, and I've been telling people that I would not allocate any money or capital to these tech firms because that's the nature of the game, that once you become so big, so dominant, your business models get spent, more competition comes in, regulatory pressure increases, and so that sows the seeds for new firms to emerge. And in general, I feel the tech space became very overvalued and overheated, and that's going to cool down, and we're seeing that effect even in India now, where a lot of the tech craze that you had for some of the unicorns and other companies, that's cooling off.
That's your next graphic actually, that the tech slowdown will hit India as well. In fact, it already has hit it. In 2021, 35% of all capital raised through IPOs were tech. 2022, that became 2%, and that you think that pattern is going to continue?
Yeah, I think that this was a climax we had in 2021. So in many ways, for people who have lived through this, there are shades of this of what happened in 2001 or so, which you got a big tech boom, and then you had a bit of a bust. And even though technology is here to stay, to be there for a long period of time, but it will take a while now for this recovery to happen, for people to digest this mini bust that's happening. Now, it'll be much more pronounced in the US, but even in India, we're likely to see some of that happen, and the evidence is already in terms of what's going on.
And I did want to censor this next forecast of yours, because you're saying more money for TV doesn't mean better TV. Less money means better TV. Just have a look at this data and don't take this seriously. TV needs money. In fact, less money has meant better TV. Money spent on TV content has surged from 2018 to in 4 years from 89 billion to 142 billion, but the content has not done well. Just look at his data on content. Look at that. This is ratings of content and shows. It's just a downward slide, and more money being spent and is going downwards. So less money could mean better, and that's what's happening.
I think that's what could happen, but the basic point is this, that this has been the golden age of television, as you know, especially for streaming, that we saw a surge in the number of new streaming services. We saw so much cheap money available to fund new projects, new series. So global content spend on television surged over the last few years. But my point is that quality went down, that so many shows were commissioned which were possibly poorly conceived, with the script or the concept wasn't properly done, but just in a hurry to get new subscribers, new users, we got so much of content out there. So the quality went down, the focus was on quantity, and now what's happened is that as you get much tighter money in general, as we have argued, because of higher interest rates,
they will sort of raise their bar.
And also the tech sector has gone bust, in which, which is the funder for a lot of this stuff. I think what happens now is that the focus on quality goes up, because a lot less number of series get commissioned, a lot number of shows get commissioned. And I think that this has, as always, implications for India, which we're already seeing. That in India, if you look at it, what happened is that because all these major streaming services, the Netflix, Amazons and Disney, they had so much money to spend, they spent on buying all sorts of movies and all sorts of series, and a lot of that was junk, was drivel in terms of that, but they sustained that by doing that. Now they're cutting back dramatically.
Even in India and in the world.
Yeah, like I'm told that some of the leading services in India, if they were buying, let's say in a year, 30 or 25 to 30 movies directly to go to digital, they, in 2023, that number is likely to be in single digits, maybe 6 or 7 they will do. So
from 25 to 6 or 7.
As just an example, huge drop. In terms of that. So that means the pressure on budgets, the stars, how much they can charge, in fact, is going to go down a lot.
In fact, your graphic shows that's a global phenomenon as well, because they made massive losses, and after those losses, there have been major cutback on series being commissioned. Just look at the losses that were made by these streaming companies. $5 billion losses. What the reaction was, a cutback on the number of news shows from 200 to 150 between the 2021 and 2022, and you see that trend continuing.
Yeah, that's for the US we have this data, that we will see the same effect out here, and I think that it may be for the better that you could focus on quality, because today, when we were having these year-end dinners and you go around the table and you ask people what were your favorite series of the year, people would struggle to come up with names. There's so much content out there, but when you try and come up with what were your favorite series, what were your favorite movies, very few roll off your tongue. So I think that it's because there's so much content, but so much of it was just not that well conceived, that now we are likely to have much stricter budgets and possibly better quality going forward.
So you're saying less money for television. Okay. We'll edit that out in the last section when we show this, put this on air. Okay, and the next point you make is that after decades of being a big worry in the world, Japan, with high debt and all that, Japan is back. That's excellent news. And you said earlier Japan had a major problem of debt. And now you're saying Japan's debt is now better than other developed countries. For example, in the early 1990s, look at that. Japan's debt was many times higher as a percentage of GDP than developed markets' debt. Now, developed markets' debt is higher than Japan. I think this is a transformation that is really welcome, because Japan really did suffer for many years.
For many decades.
Many decades, sorry.
Because like you will recall that in the late 1980s, Japan was the shining star. It was, in fact, 16% of the global economy. It was 45% of global stock market value. That was Japan. It was, and then because of the bust that happened and the way it was handled, but also driven by its poor demographics, with the population shrinking, with debt levels so high, and other issues, the Japanese economy and the Japanese market have done very poorly over the last 3 decades. My point is that now quietly Japan may be making a comeback, because a lot of the problems that Japan has, the rest of the world also has, in terms of the debt levels have gone up, the demographics in the rest of the world. We're seeing more than 60 countries today have their working age population that is shrinking. That number, when Japan first went bust in 1990, was barely 20 countries had a shrinking working age population. So the rest of the world is in a way converging with Japanese
Catching up
standards.
with Japan, and Japan is going ahead. It's
And
just,
Japan is improving. Its corporate profitability is improving over
Yes,
time, as
that's
we're
your
seeing.
next graphic. Have a look at that. Explain that to us. That profits are at a historic peak in Japan now.
Yeah.
As a 2% profit margin, they've gone up, 3 times? That's
Yeah.
huge.
And around the world, we have seen an increase in corporate profit margins, but for a country that was criticized for not being
Right.
that focused on profitability, I think it's interesting that in Japan too, we are seeing this focus come through. And also some other points that we discussed. For example, the female participation in the labor force is very high in Japan, and at about 85%. And you need more of that to try and offset the demographic disadvantage that Japan has and other countries too have. So it's a quiet comeback. It's not something which is headlined out there, but I suspect this year in 2023, we are likely to see Japan do relatively well because of the fact that on the downside, the rest of the world has converged with it.
Right.
On the upside, Japan has seen some major improvements from its corporate profitability to the female participation in the labor force. That should help Japan in general.
I'm going to go on complete diversion. Female participation gone up in Japan, and there's a lot of data that shows that India female participation is very low. But that goes against reality when you see it. You see a man sitting just doing nothing, and the women in his family are picking wood, burning, getting water from the well, cooking. I mean, they are participating, they are working much harder than men, they just don't get paid for it in India. So the data doesn't show their participation. That's not fair.
That's possible.
Start paying for them. Okay, and one interesting point that you raised, that with Japan coming back, a rising Japan could lift India. The foreign investment from Japan to India could go up from 3% to 7% and higher. That's the trend.
Yeah, so Japan's been a major investment partner of India. Having a healthier Japan with better corporate balance sheets could further that process. And even Indo-Japanese trade has slowed down a lot in terms of that. If you look at the exports that India does to Japan, Japan's become a less and less significant partner on that. But the Japanese economy does better. That could help our exports too at the margin. But the most important point being that as an investment partner, Japan's been quite significant.
And going better and better. And the better Japan does, the more India could benefit.
That's right.
Wow, that's huge. That's very good news for India. Your next point is about people are outsourcing no longer to China, outsourcing outside China. And that could be a big opportunity for countries in Asia, etc. If you look at outsourcing to China from America, China loses share of US imports. It's gone down by about 4%, and the rest of Asia has gained. India has only made a small gain. So China, outsourcing to China has gone down 4%. Other countries, excluding China in Asia, have gone up 4%. India so far, the outsourcing has only gone up 0.2%. Why is that? Why are we not getting more of that?
Well, first to put this
change?
in perspective, what's going on,
Yeah.
which is that China was the factory of the world for much of the last 2 or 3 decades, where everybody in America or Europe wanted to set up a factory in
Yes,
China, given
yes.
the scale they have, the
Yes.
low wages they've had. The last few years, a couple of things have happened. One, the Chinese wages have shot up a lot, making it a bit more uncompetitive. And
Right.
2, for geopolitical reasons,
Yeah.
I think that people don't want to put all their eggs in the Chinese basket. They
Right.
want to diversify out
Yeah,
there.
yeah.
And so they're looking for new investment destinations. But very interestingly, they still want to outsource because the wages are still so much cheaper in the rest of the world.
Right, that is reality.
Yeah,
yes.
because in America, in the manufacturing sector, for example, wages, I think, for manufacturing employees are over $5,000 a month. But look at the wages that you have in the rest of Asia. It's not even $500 a month. So there's a lot of incentive to still outsource, just that people don't want to do that to China anymore.
because of geopolitical, all their
Geopolitical
wages going up.
reasons,
yeah.
wages going up. And so which are the places that they're looking for? It's been Vietnam, Cambodia, Bangladesh, and even India's wages are very competitive, and we've
Yeah.
seen some gain,
Your
but just
data
not as
on
much.
that, actually, if you could take us through this, because China's wages are now much higher than the rest of Asia, and you can see basically as China's economy has developed, the rest of Asia has a wage advantage over China. I mean, in other words, wage advantage means we have lower wages than China, and that's attractive for foreign investment. And you can see India's, way below China in terms of wages, so it's attractive, but Vietnam and Bangladesh, very attractive in terms of foreign investors. But even with this, only 0.2% of that change is coming to India.
Yeah, so both ways looking at it. One is that it should be a lot higher, but two, the fact that there is this opportunity out there that people still want to outsource. That's the message, just not to China. And India has the scale if it can attract some of that outsourcing.
So the solution to this is that India must try and get that outsourcing that's moving out of China and going to other parts. We must work harder at that. I mean, when I first started The World this week, I mean, the China change in wages, when I was there before you were born, people were going around on bicycles with Mao outfits. Thousands and thousands of bicycles on their main streets. I went into factories, they were Soviet type, old fashioned, with poor, everybody poor. Then came the first McDonald's, then came the first golf course, and now there are 2,000 McDonald's. Deng Xiaoping, I don't care whether a cat is black or white as long as it catches mice.
Right.
So we need to learn how to make things attractive, and they made things very attractive for foreign investment, right?
That's right.
How can we do that? What's the solution? How do we make ourselves more attractive for foreign investment?
But it's multifaceted, like it's about the infrastructure you provide. It's about,
Right.
The harassment you have or don't have from the tax authorities, other people, of people doing business in India. So I think that it's the entire ecosystem. It's not one factor which facilitates more foreign investment.
But this is a solution we really need to improve jobs and improve growth, right?
Yes, absolutely.
To get this outsourcing that's going away from China. At the moment they come, look at India and then go to Vietnam. So there's something we need to change. We need a solution on that. Your next point is that there's going to be a return to orthodoxy. And what do you mean by that? Just look at this. 10 developing countries with biggest twin deficits. You mean fiscal plus external account deficit. And India's in the top 10 of the world in terms of, so this is a worry, and now orthodoxy means change that.
Yeah, no, in terms of, the point I'm making here is this, which is that because the era of easy money is over, interest rates have gone higher everywhere, and financing in general has become much more difficult. In this environment, the scope for policymakers to do something too experimental, something away from what is defined as economic orthodoxy, which is that you need to follow a tight fiscal policy, you need to have relatively high interest rates. If you try to do something different, the market's going to come and punish you. And we saw that in the last year or so. Exhibit A being UK, where Liz Truss tried to do something too different in terms of cutting taxes and still not cutting spending and thinking she can blow the fiscal deficit out. The markets revolted and she in fact lost her job.
So the world now looks very closely at deficits, your twin deficit.
So the focus has come back. When money was easy and there was too much plenty around, you could finance a lot of bad economics and bad behavior.
Unorthodox
stuff, so to speak. Now the scope is very limited. The good news for India is the fact that we have generally followed an orthodox economic script, that even though we have large deficits, we are not blowing them out. And one of the things which I did sort of commend even the current folks for was the fact that we did not overstimulate too much, because there was so much pressure
to overstimulate, etc.
To stimulate and do that. And I think that, that some countries which did it, including Brazil and others, paid a price for it. So I think it's very important.
Back to orthodoxy, and to some extent India has been reasonably orthodox in its fiscal and fiscal management. If you see, India has actually been unpunished so far, according to your data, due to fiscal orthodoxy. We've been careful. India's fiscal balance has improved a little bit, while the rest of the world, in terms of emerging markets, it's got much worse.
This is what happened in the last year, which is the fact that these forecasts changed, where India saw some improvement. So for now, even as I think that, that they present the budget, I think that the focus should be on orthodoxy and not any experimentation, because the temptation will be, with an election coming up in 2024, let's spend more, let's do more like SOPs and stimulus.
In the run-up to elections.
And you do not want the market to revolt against that, because that will be a real problem.
Very, very true. what are they called? Reveries, or what are they called? No, but this again is a section I would like to censor. You're saying you're going to have a relief from elections. We love elections. Why do you want a relief from it? What do you mean by this? Let's have a look at what your data says. 2023 unusually will be a light year for elections around the world. Then that's just before the election storm in 2024. 2023, no country has elections this year. This has not happened this century.
Among the G7 countries.
Among the advanced,
Among the
ones that have a huge
the seven
impact.
largest democracies, there's not a single country having elections in 2023, and that's not ever happened this century. So it's quite a coincidence that that's happened.
And you're saying on G20, the lowest number, only 2 elections this year, lowest number in 35 years?
Yes, that's right.
And that you're saying, but there are 2 elections and spotlight will be on possible regime change in Turkey and Nigeria. Are you, this is based on opinion polls? You done a forecast?
No,
but that's what people are talking about.
Yeah, that's what people are talking about, which is the fact that among the G20 economies also, which include some emerging markets, there are hardly any elections this year. So very rarely does something be newsworthy for something not happening. And the fact that we have a bit of a pause in 2023 is very unusual as far as the global electoral cycle goes. But a couple of countries which are having elections, not that big but still significant, are Turkey and Nigeria.
Yeah, they are.
And in both those places, if I can dare say so, that if you get a regime change, that could end up being good for those countries, because in Turkey's case we have seen that Erdogan, who started off strong, has really run his economy into the ground. Now it's far from clear that he will lose, but the opinion polls are pretty tight. So we'll see how that plays itself out. So that's an election worth keeping on.
Nigeria, and he's had 1 or 2 setbacks in local elections.
Yeah. So I think that's like an election worth keeping on, and also because there's so much fear about strongman rule and stuff. And 2022 anyway was not a great year for strongmen around the world, arguably. But as far as Turkey is concerned, we'll see what happens in 2023.
Yeah.
And Nigeria is the other one.
Know your forecast for your travel in 2023 is not going to be, after these statements, not going to be Turkey or Nigeria, is it?
It's always India for election travel.
Okay. No, I mean just for travel after you've said, the truth.
Yes.
Okay. And but elections this is an amazing factor that you found. Elections cause gains in stock markets in developing economies, but in developed economies, stock markets underperform in election years. Look at stock markets during election years. Developed countries, down by 3%, underperforming relative to other stock markets. Developing countries, they overperform by 4%. Elections are good for developing countries, stock markets and the economy. We should have lots more elections.
No, this is the piece of research that I had done earlier and we've spoken extensively about, which is that normally in emerging markets, the best stock market returns tend to be when a new leader comes to power with a fresh mandate, because that's typically when the new leader is most incentivized to carry out economic reforms.
Right.
So that's what we've seen historically. So there's hope.
Yeah.
And so therefore when, like in developed countries, the potential for a leader to come and change things is much more limited. So it leads to more volatility, but not necessarily a better outcome. But in emerging markets, fresh leadership can often lead to better stock market performance, and that's something which we may even see in the likes of Turkey, Nigeria. There's a regime change. I think the stock markets there could fly in 2023.
Now you're saying we should look out for bluebirds. When there's gloom and doom, when the things are going well, people look for black swans. We've known about that. But now bluebirds we should look out for. And the gloom that's being forecast that you highlight here is that not since surveys began have forecasters thought that a recession is going to come more likely than it is now. The probability of recession is the highest it's been for 50 years. That forecasters are now, of course, economists are invariably wrong, especially Bengali forecasters, but we do forecast at least and we are wrong. But now a large, almost over 40% are saying there will be a recession.
Yeah, so the context here is this. One, as you point out, that in the history of surveys, economists have never forecast a recession. So if a recession does happen in 2023, it will be the first time in history of surveys that economists actually called a recession. But the broader point here is this, that generally there's a lot of gloom around the world
Right.
And it's partly because of economics, it's partly because of politics, because we've been
Right.
through such a difficult period
Yes.
where you had the pandemic and then you had the invasion of Ukraine, you've had these kind of, and then politics in many countries has not been that favorable
Right.
with all sorts of surprise election results. And now black swans in general came to, rightly or wrongly, came to be a symbol for what could go wrong.
You know, when everything's going
When
well,
everything
you
is
say,
going
be
well-
careful about this or that. But when
Yeah.
everything's going terribly,
Yeah.
you look for bluebirds.
Yeah, so
I love that.
Yeah, so this is something which I found that the bluebird is in fact a symbol of joy. It's something which brings an unexpected happiness, and so therefore it's a symbol of even hope that in the direst of times you should keep some hope that a bluebird may arrive. So my point is that even that this is a tough era. Money has become much more difficult. Interest rates are
Inflation.
higher. There's a lot of forecast about what's going
Slowing
to
down
happen.
in the growth, inflation,
growth, and
yeah.
also we're conditioned by all these shocks were happening in Russia, the pandemic.
In fact, actually, you've got a little list which is lovely. At times of gloom, it may be best to look for bluebirds rather than black swans. So it's bye-bye black swans? No. One second. Black swans are what we've just been through, war in Ukraine, the terrible pandemic, and Brexit,
Right.
which had a huge impact on Europe and
Yeah.
therefore on the rest of the world. And we're looking for bluebirds now, which you think maybe Ukraine peace settlement, US-China reconciliation maybe, and maybe inflation disappears, but at least look for them in this period of gloom.
Yeah, because all these are very hard to predict and are not the base case forecasts. But my point is that in times of gloom, maybe something comes and suddenly brings us joy. So therefore the focus shifts to looking for bluebirds.
Well, you have certainly made some major forecasts, and it really will affect all of our viewers and our behavior over the next year. And sometimes we do a mid-year one, but we will certainly do this again next year, and 99% or nothing. Done?
Well, that's
Only
a rather
time
high
will tell.
bar. I'm not sure how to react to that, but
Only time will tell you.
exactly, yeah.
Which is the worst cliche in the world. Well, thank you very, very much. I once again learnt a hell of a lot out of that. Did I say that? I think that was misquoted. But no, I did learn a lot. Thank you very much. I think everybody did. And we'll be following the economy with much more foundational knowledge based on all your data. Thank you very much. And all of this is available in detail on ndtv.com. And Ruchir is also writing part of this for the Financial Times. So watch for this and watch for the new organization called Breakout Capital. I know you told me don't mention it, but I have to. Thanks very much. See you again.